Hi guys, this is Dean. Today we are going to look at something different. We're going to look at a specific stock in particular. We're going to leave the US and Europe, and we're going to go to Israel. The tool I'm going to use to look at this stock is Koifin. If you're interested, you can get 20% off in the description, in the link in the description. So the Tel Aviv Stock Exchange is a stock we're going to look at, the TASE, T-A-S-E. And despite the recent conflict in the Middle East, the stock has actually skyrocketed in the past year. It's interesting because right now we are having a lot of serious, heavy situation going on in that region. Obviously, the conflict is bleeding over outside of Israel now, into Lebanon, into Syria, into Iran. This creates obviously a lot of volatility in the region, both in terms of outside of financial markets, but also in financial markets. Now, it's interesting that the TAS has gone up so dramatically in the last year. Just as a reminder, if we look at the actual chart, performance chart of the stock itself, and I pull a 3-year chart, the conflict or the attacks by Hamas on Israel happened in October 2023. And at that time, the price of the stock initially contracted significantly from about 30% initially. I guess the overall sentiment was that this stock, just let me explain, this stock is actually the company that runs the Israeli Stock Exchange, okay? So the stock of that company dropped significantly by 30%, probably on the sentiment that capital would flee Israel with the conflict, and money will be pulled out of Israel and never to come back, and essentially reducing the AUM of the bourse of the stock exchange. The assets under management would go away or would significantly reduce. Therefore, the company would make less money on commission on trades, and the activity on the exchange would be smaller in the future. However, that's not what happened. Obviously, it bounced back, and for the last year, it completely exploded. And even in the recent weeks, when we had the conflict in Lebanon starting, it even went up to new highs. So what happened is that essentially the level of activity on the exchange has dramatically increased, and this is good for this company, because the more there are trades, the more there are commissions on trade for the exchange. And so the exchange has profited dramatically. If we look at the financials here, if I pull up the income statement, we can see that the revenues for the exchange were about $300 million in 21, then $360 million in 22, and then $390 million in 23. And in the last 12 months, so we have just the last 3 quarters, it's going up to 410. So we have a sequential growth of 6% year on year, then 11.5% year on year, then 8% year on year, and now 12% year on year. So very, very healthy indeed. And the gross profit is it was very similar. Well, basically there's no number, so it's the same. But the net income is it's good. It's sequentially growing as well, from 45 million to 50 million to 83 million to 88 million. So actually 2023 was the year of the conflict started, and that's when they became suddenly even more profitable as a company. In terms of the balance sheet, an interesting item I found, first of all, is that there was no red flags. I didn't find any weird items or lumpy stuff popping out. It seems another indication to me that the level of activity increased a lot in the year 2023. Is that if you look at, for example, the current assets or the total assets, we were at 1.5, 1.8, and then boom, suddenly 2.6. And now we've gone back down to 2.2. So there was obviously, because it's an exchange and they're holding a lot of stocks in their inventory, there were lots of not only stocks, but any kinds of financial instruments, contracts, etc. So they were actually having a lot of stuff in their books in 2023, which signals, if this is an exchange, that there was a higher than normal level of activity. And the other thing, and similarly on the liability side, as you can see, in the total liabilities, we were at 800 million, then 1.1, and then boom, 2.9 thousand. So this is billions, sorry. So 800 million to 2.2 billion. And then went back down in line with the assets. So again, 2023 was a great year. And the equity is pretty good. Usually you see stuff in the additional paid in capital. Now this is an Israeli stock, so it might not present things. You would have to check the accounts published, made available on the TAS website. But it seems to be there's sequentially growing retained earnings. That's the profits going into the balance sheet account. We went from 596 to 593 to 290, 298. Actually, I'm sorry, this is contracting. So this is not good. It looks like it's showing as if the company is making a loss. However, the comprehensive income is increasing. So I would investigate further what's going on there, because it's kind of weird. Again, further work to be done on this side. But yeah, other than that, the cash flow statement shows that the cash that the company has moved around really came from their operations and not any other sort of schemes. As you can see here, this is the cash from operations: 100 million, 120, 160, and 140 in the last 12 months. And the other two items, so cash from investing and cash from financing, didn't really impact the overall cash balance. It's really all coming from the cash from operations, and that's always a good thing. You want the cash coming from the actual business itself and not from somewhere else, some loans or some financing activity. So no red flags there either. In terms of the profitability, one ratio that popped up was the return on equity, actually. We're standing so in 2023 we're standing at 15%, and historically it was around the 7%. So the return on equity doubled last year, and the return on equity is very popular, really ratio, especially in value investing, stuff like this. They would look at this very favorably. So very good on this side. Now the margins are not very meaningful here, because this is not some sort of factory business, right? It's a bit more of a sophisticated business. So margins hard to read on this side. Current ratio of just above 1, so not necessarily great, but not bad either. Again, because this is an exchange business, this could be meaningless, really. Solvency, something else that popped up was the interest rate coverage. Very important ratio. It was at 150 or 300 here, and it went down to 21 in the last 12 months, However, I didn't see any huge loans being taken. As you can see in the cash flow statement, there was no huge loans taken out. So I think this is just a mathematical error here, because in the previous years, the interest coverage was more than healthy. It looks like this company doesn't have really any debt, yeah. So this looks pretty interesting as a long. Probably the conflict will continue anyway, guys. It's hard to tell, but it looks like there will be more and more activity on this exchange, and they will just profit from it. It's pretty sad, unfortunately. I'm not for that conflict at all. Just witnessing what's happening. And you can go on the Tel Aviv Stock Exchange website, and I invite you to go and look at the presentation they've published for the second quarter of 2024. This is the latest one, which gives their side of the story here. We're seeing it on Koifin. Could be, distortion in the numbers there. So it's good to have a look at their reports. And basically they're showing good signs here. Obviously they're always going to show the positives, but yeah, like for example in derivative contracts here, the average daily turnover has gone up 10% year on year. The bonds 5% year on year. The government bonds, so these are the treasury bonds, these are government bonds, 24% year on year growth. And remember, this is an exchange, so they do make money on each trade. They take a little commission on each trade. So the more activity, the better. And it seems that, especially in the bonds department, right, 24 for government and 20% year on year growth for corporate bonds. That's a huge level of activities here. And this is for the second quarter of 24. So this is not 2023. So as I said, 2023 exploded. We saw it in the balance sheet, the level of activity. Here they're saying in 2024, this seems to continue. And therefore, that's why we see it represented in the share price. Alright guys, that's it for this video. I thank you for watching, and I will see you next time.